What funded traders don't tell you. Everyone wants to be a funded trader, right? The stories are everywhere. Payout screenshots, success montages, dramatic withdrawal clips paired with captions like, my first 10K week. It's hard not to buy into the image, freedom, flexibility, and finally escaping the grind. But there's one part of the story you rarely hear about. What actually happens after you get funded. It's not that traders are hiding anything, it's just that this part isn't as exciting, and for many, it's not what they expected. Because the truth is, getting funded isn't the finish line. It's where the real pressure begins. I've worked with funded traders from all over the world. Some of them scaled fast, others flamed out just as quickly. And the pattern is almost always the same. Once the badge is earned and the initial payout hits, the pressure to perform again and again exposes gaps most traders didn't know they had. What funded traders often don't say is that many of them are trading scared. Not because they lack knowledge, but because the psychology shifts the moment real capital is involved. The confidence they had during the challenge turns into hesitation. They start protecting the account instead of trading with clarity. Without structure, support, or risk discipline, many give back everything they just earned, often in a matter of weeks or even days. And it's not entirely their fault. The current funding model isn't built to support traders for the long haul. It's built on volume. The business is designed around resets, retries, and challenge fees. The system thrives when traders pass, fail, and come back for another round. That's the loop. And most don't realize they're in it until it's too late. Let's put this into perspective. According to FPFX Tech, a major prop tech provider, only 7% of over 300,000 funded accounts made it to their first payout. Some firms see numbers even lower than that, as little as 1%. That means for every 1,000 traders who buy a challenge, fewer than 70 actually get paid. And when you calculate how much firms make in fees versus what they pay out, it becomes clear. The model is tilted heavily in the firm's favor. But the deeper problem isn't just the numbers, it's how little support exists after funding. The moment a trader gets funded, they are left to figure things out on their own. No mentorship, no review process, no real accountability. That's when fear creeps in. Every trade starts to feel heavier. The plan gets blurry. Emotional decisions take over. And slowly, the account unravels. You've probably seen the online stories. How I get funded with $200,000. My 10K payout in 14 days. But what you don't see is the follow-up. What happened in month 2? Did they keep the account? Or did the lack of structure catch up to them? I watched a video recently where a trader passed a 100K challenge and got funded. Payout and all. Within only 1 month. The video was honest and well edited. And people loved it. But if you check the comments on his next video, the tone changed. Frustration, confusion, and the admission that he'd blown the account trying to repeat the same trades that got him funded in the first place. But he is not alone. I've seen this pattern across Discords, forums, and Telegram groups. It always starts with, I've passed. Then I got funded. And it ends with, I lost it. It's easy to blame discipline, but that's just the surface. What's really missing is preparation and the kind of structure that builds real consistency. Because passing a challenge and becoming a consistent trader are two very different things. A challenge rewards you for hitting a short-term goal, but real trading rewards for long-term behavior. It's about showing up when the market's choppy, when the setups aren't clean, and when your confidence is shaky. That's when your edge either holds or disappears. And once you're funded, fear becomes a factor no one warned you about. Traders start shrinking their positions but not their risk. They clip winners too early. They abandon plans that worked just fine the week before. Not because they don't know what to do, but because now there's something to lose. That pressure breaks more traders than any setup ever will. I know because I've been there years ago. I was trading with a firm. I was profitable, consistent, playing by the rules. And then one day I got an email. My trading style didn't fit their model. Too aggressive apparently. Even though my risk was in check and my returns were solid. No conversation, no warning, just gone. That was the moment I realized even doing everything right isn't always enough. In many of these models, whether traditional institutions or modern prop firms, there's an unspoken line. Stay within it or lose your seat. That's when it became clear to me. This industry needs a better system. One that supports the trader beyond a single payout. One that rewards skill, not just volume. That's what we set out to build and why we fund traders differently. If someone puts in the work, builds their edge, and proves consistency, we don't make them jump through hoops. We fund them directly. No phase one, no verification, no reset bait. But more importantly, we don't disappear after that. We continue supporting them. Because that's what it takes to stay funded. Not just capital, but real support. The part no one tells you about being funded is this. Your mindset changes after that first success. You'll start to doubt your edge, even when it's working. You feel more pressure to protect capital than to follow the plan. You'll feel alone, even though you're doing well. And that's why the environment matters. That's why mentorship matters. And that's why preparation matters more than the payout. So, if you're funded now or trying to be, don't fall into the trap of thinking the challenge is the hard part. The challenge is just the warm-up. The real challenge is staying funded, building consistency, managing your psychology, executing through uncertainty, and doing it again and again and again. If you're navigating that journey now, I respect it. And if you're learning the hard way, know this. It's not because you're not good enough, it's because most systems were never built to help you stay funded. That part is up to you and the environment you choose to grow in. If you made it this far, let me know in the comments what's been your biggest lesson since getting funded, or what's holding you back from reaching the next level. I read all the comments. And if you're serious about mastering the craft, not just passing the challenge, you already know what needs to happen next. Stick to the process, build your edge, and keep showing up. The results will take care of themselves. Let me ask you something. What if getting funded too early is actually the worst thing that can happen to a trader? It sounds strange, right? But I've seen it play out so many times. A trader nails a challenge thanks to a few hot trades or perfect week. And boom, they are funded. The problem? They never developed emotional capital. They weren't tested under pressure. And now they're holding real capital with no real resilience. The first drawdown shakes them. One bad trade becomes a spiral because they build strategy memory, not actual skill. It's like giving someone a driver's license without ever letting them drive in traffic. Of course they crash. And the worst part, it's not just the capital they lose, it's confidence. That takes even longer to rebuild. So if you're chasing funding, ask yourself, are you building something that holds up under pressure? Or are you just hoping the market stays kind long enough to pass the test? Sometimes the worst thing that can happen to a new trader is winning early. It feeds the ego and masks the cracks in your process. You start thinking you've got it figured out. So you stop reviewing, you stop evolving, you over leverage. And then when the market shifts, and it always does, you're unprepared. I've seen traders go from big payouts to back-to-back losses because they got complacent. They weren't building skill, they were riding momentum. That's the danger of success without foundation. It makes you believe you've earned results you haven't trained for. And that belief, it's the quickest way to stall your progress. Because the market doesn't care about your confidence, it cares about your consistency. Now, let's talk about ego. Getting funded flips the psychological switch. Suddenly, you're not just just a trader, you are a funded trader. That label feels powerful. You post about it, you tell people, and slowly you stop trading the market and start trading to protect your status. You take trades to prove something. You avoid stops to avoid being wrong. You size up not because it's smart, but because it looks impressive. And the moment you start trading to protect your ego instead of your equity, you're on a countdown to a reset. If you want to stay in this game, forget the title, forget the payout, trade the plan, not the persona. During the challenge phase, you always know there's a way out. Break a rule, reset. Blow the account, try again. And when you are funded, like really funded, that reset button disappears. And that's when most traders freeze. Every trade starts to feel heavier. Every decision carries weight, and hesitation creeps in, even when the setup is clean. That's the psychological shift no one warns you about. You've trained in a world with safety nets, and now they're gone. The question is, have you trained your execution for that environment? Or are you still relying on habits from a phase that no longer applies? You don't need more funding, you need better execution. After losing a funded account, many traders make the same mistake. They buy another challenge. They think capital is the solution when it's really the amplifier. If you can't manage 25k, what makes you think you'll do better with 100k? Funding doesn't fix inconsistency, it magnifies it. The problems you had before don't go away, they get louder. That's why scaling too soon can be more damaging than not scaling at all. What you need isn't more accounts, it's more structure, better discipline, tighter review habits. Because until you fix the behavior, you're just increasing your exposure to risk, not your potential for success. Thanks for watching. If this helped you or challenged how you see your trading journey, let me know in the comments. I always appreciate hearing from traders who are serious about growth. I'll see you in the next one.